Good afternoon. This is Joe Krutzinger. Today is Thursday, February the 25th, 2016. This is our regular monthly optimization recalibration. Of course, I'll post all the updated settings in the summary. You can have the PDF and use it as you wish. I'm also going to show you a new idea on knowing when to switch from a trend approach strategy to a support and resistance strategy. This is experimental, but I want to share it with you, and maybe you can play with it and give me some feedback what you think about it. All right, the presentation is hypothetical, except where it's not. When it is a real presentation as far as performance, I have a different disclaimer, and the slide color is different. It's a little aqua. But I'll bring that to your attention when we get there. I do suggest every month on these end-of-month ones that you do get the PDF so you can check your settings and make sure you've got the most current settings. The three terms I like to define at all my presentations. First of all, hypothetical, simulated, they mean the same. These are trades that have not been executed that are generated by a strategy with the benefit of hindsight. Now, whether you've written a system today or you wrote it 5 years ago, if you recalibrate it and put new inputs, you have a hypothetical report. And that's what we do when we look at our 4 months of data, re-optimize them monthly, and then put those settings up. I also keep track of how well have we done. I've been doing that now for a little over 33 months. And the blind walk forward are trades that have not been executed, but we keep track of all the trades. And the way I do it is I shut the workspaces, and then I pull them up a month later, 2 months later, 33 months later, and see how well they have accomplished. Okay, let me move back here a little bit. We jumped ahead. The next thing, of course, are real results. These are actual trades that have been filled in an exchange. And nothing can give you slippage except for real results. So once you trade for real something, you'll get the slippage numbers. You can compare them to the ones I put into the report and adjust them accordingly. Okay, here's a little bookkeeping type note. We're all going to have to do this the second Thursday of the month of March, but anybody who's trading bonds has to do this Monday, February 29th. And what they have to do is they have to go to their chart and change the @USH16 to @USM16 and then save the workspaces. And the way you know when to change is I put up a table here that shows you the quotes for the March bonds, the June bonds, and the Sep bonds. And I think you can see the volume today in March was 237,000, in June it was 147,000, and in Sep there was one traded. So basically you obviously want to trade in either March or June. Now, the last trading date for March bonds is March 21st, 2016. But the first notice day, that's when they start giving delivery notices, is February the 29th. So, my suggestion is February the 29th, go ahead and change that March to a June, and you can check and make sure that the volume is bigger in the June than it is the March. But that's really how you determine, is when the volume switches from one contract to another, we want to go to that contract with the most volume. If you have any questions, I can get on your machine with TeamViewer and fix it for you. It's no problem. Now here's the shapes retune values, and Joe's Best, 1, 2, 3, 4, 5, 6. There's 2 shapes that are in Joe's Best. That's number 1 for the original Russell. Those numbers haven't changed. And then number 3 on the mid-cap. And you can go through and change the values at will. Here's the Razor retune numbers. And for Joe's Best, there's number 2 bonds and number 6 E-mini S&P. And here's Razor with ribbons retunes. And there's number 4 NASDAQ, mini NASDAQ, and the mini Dow is number 5. Those are the ones to change on Joe's Best, are the ones with the red column. Now here's colors, and the only one that really changed is the gray. It's changing to the values that are on the new TSW. Now here's the slips and commissions in the new TSWs. They're all the same, but I've got $24 with the slip in the Russell, $31.25 in the bonds, $30 in the mid-cap, $10 in the NASDAQ, $10 in the mini Dow, $12.50 in the E-mini S&P, and a $5 round turn commission on all of them. Here's your day trade margins at TradeStation, and they adjust by various brokerage firms. Some brokerage firms don't give day trade margins, but as a rule of thumb, if you have $5,000 in an account, you can trade pretty well everything on initial margin. Now I see that the Russell is $5,900 and the mid-cap is $7,370. I would shy away from the mid-cap anyway because of the thinness in the volume there. But, you know, $5,000 to $6,000 per contract, you should be okay. And if you're a trade station, be sure to call them and tell them that you want the day trade margins. You're trading a professional trading system, and you'll be out of all trades by 3 o'clock Chicago. Now, you know my three favorite strategies. It's Razor, Razor with Ribbons, and Shapes. Razor and then Razor with Ribbons are both a trend breakout type strategy, and they work when the market's trending very well. Shapes has no time base, but it's a swing support resistance strategy with some pattern confirmation. Now, I've told you starting January this year, I said, hey, looking at this last year, Shapes was the very best stuff of the three systems in the last year, and that the Russell on the original Shapes tune was the best one. Razor and Razor with Ribbons haven't done well so far this year. I'm going to show you why here in a minute, but here's the Razor Reops. Basically, January there's on top, lost $4,500. In February so far, she's made $277. So really there's nothing there in Razor. Razor with Ribbons is worse because Razor with Ribbons is looking for big trades, smaller a number of trades, and when it loses, it loses. In January it lost 38.45. And in February it lost 57.41. So trend following, trend reacting systems, at least mine, didn't work in January, February very well. Now if you want to keep getting what you keep getting, just keep doing what you're doing. One of the reasons you buy a trading system or a set of trading systems is to replace or supplement your current methodology. Why not get what you pay for? Many would-be system traders will only follow a system until they've had 3 losers in a row, and then they put it on the shelf. Almost every strategy will experience those 3 losing trades, so those traders are destined to fail. Give your new approach a chance to work. That's the most important rule I know. If you got $5,000 margin, risk $2,500. It's a good rule of thumb. If you lose $2,500, pull away and recount your money and go again. Now here's an idea I talked about with a fairly sophisticated client over the week, and I wanted to bring up what this idea was. This is the mid-cap, which is one of the swingingest. It's got light volume, but it really swings, and this shows it back a little bit before 2003 up through today, and it's a weekly chart. And it gives you an idea that you've got a major trend. If you look at that first there from 03 until 07-ish, there was a 4-year uptrend. And then you see that crossover of this moving average. This is a 20-week versus a 200-week moving average. So it's basically 2 years versus a half a year. So it's trying to find the major trend. So you had that major uptrend for 4 years. Then you had that crash, more or less, from top of 07 down to when Obama came to office in 09. So that was 2 years. And then you had another crossover there about, let's see, it would have been March 2009, and then it went up to June 2015. Now, it looks like there's a cross there in 2012, but there was not. It touched it, but it didn't go through it on a weekly basis. So basically, again, this is just a review. This is 13 years. It's a weekly chart. It's a moving average. There's only been 3 crosses. There's a cross down at the down arrow, a cross up at the green up arrow, and a cross down again December the 21st of 2015. So putting that into contention, you would see that you have a major trend of the last 6 years that got violated in December of 2015. Now, look at this information. If you look at this EMD chart, this is a 5-minute chart on Shapes, and this was the optimization that we were running through today on the Shapes on the mid-cap. And you can see where it broke its trend line there on the red and started really working where the trend line is green. And that date is December 21st, 2015. So that tells you that, and the way I came up with this chart, I optimized it over the 4 months of data like I do and gave it to you guys to trade. And then this chart, I just pulled her back another 14 months on unseen data to see when did Shapes start working so well, and when did it not work well? Well, it didn't work well clear back through October 28th, 2014, and then it started working well December 21st of 2015. And that green is only 3 months. Anyway, here's Joe's Best re-ops, and these are the ones that, you know, I say, hey, if you're going to trade a varied portfolio, you want to have multiple systems and multiple markets, then, you know, this is one way to go. This is trading one of each of Joe's Best, and in January they made 29.31, and in February they made 14.59. Now together, that's $43.90 in 8 weeks. That's $548 a week on $30,000. That's 95% annualized. Last year my real time was 17% annualized on my little NASDAQ razor with ribbons, which is one of the weakest ones in Joe's Best. But I trade that in the IRA for a reason. It has not very many trades, it has low margin, and it traditionally, when it optimizes, it has very close stops. Now, my favorite strategy that I use in the blind walk forward is shapes. It has no time base. It's a swing strategy with pattern confirmation, but it's really a support and resistance type system. And once optimized, frequent recalibration seems unnecessary. We've been running it on Russell 2000 now without any optimization since June 21st, 2013. Now, if you look at the shapes as a group, these are the ones we optimize monthly, with the exception of the best shapes that we have is the Russell, and I just keep it in there. But if you take a look at this, in January it was just stellar. It made 10,969 on those 6 markets, and in February it made 1,053, so not so good, but it did. But put them together, it makes $12,022 in 8 weeks. That's $1,500 a week on 30,000. That's 260% annualized, not 154. I'll change that slide, but it is 260% annualized. Now, if you look at colors on the dark blue and the black, we only optimize them every quarterly, and then the gray, we optimize them monthly. And if we look at where they were in January, they were stars. When you include the original shapes, which is basically what all these are based on, it made 11,004. I put it in at $30,000, but really you only need about 20,000 to run that. But that's even though we lost 5,300 in January, that's still making 760 a week, and that's much better than 130% annualized. I'll fix that slide too. I tried to get these out quickly and get your numbers, but I'll correct it and make sure your PDF has the right numbers. Now here's the early morning TSWs. They've only been running a week. Now, I mentioned when I posted them last week that the mid-cap really has too small a volume to trade between 7:30 and 8:30 Chicago time. I mean, there's like 5 or 10 contracts traded every 5 minutes. So I put it here because I gave it to you, but I sure don't want you trading it. It's just too thin in that time. Here's the E-mini, made 567. There were 4 trades. Then the regular NASDAQ lost 725, and the mini Dow made 645 on 4 trades. The TF original has made $52,000, by the way, since June 21st through this period. So if you're going to trade TF, I still stand by that this is the very best tune for you to trade. But then if you want to add some diversification, good idea, I think, is to add that ES, NQ, and YM because you're going to be done early in the day, and you're going to get that same pop that the original TF does, but you're going to get it with Chicago Mercantile items and not the Russell. Now here's the real-time disclaimer. This is what my real account has done in my IRA since January 1st, 2016 through today. It's had 9 trades. A third of them have been right, 2/3 have been wrong, and I'm down $151, and that includes slippage, commission, the whole schmear. That's nothing. I mean, there really hasn't been anything that's happened. I've been in the market less than 1% of the time, and this particular razor with ribbons does have a little bigger stop, but it doesn't participate very much. I mean, you can see it's basically 8 weeks. It's making a trade a week or a little bit better than that. Now, my main product is ideas, service, and support when you need it. All you need to do is go to eTrackRecords.com, pull down the support tab, and follow the instructions, getting a TeamViewer 9. Send me those codes, and I'll install any of this stuff, fix anything you've broken, whatever you need, that's my job, and there's never a charge to a client. Now, if you don't have these systems, I'll put them on your machine for free for 14 days, and you can play with them, look at them, put them on the simulator, whatever. I wouldn't turn them on real money. I had one guy turn them all on at once, and of course he didn't have the money for it, and he got rejected orders and stuff. So put it on the simulator and see how it works for you, and see if there's something here that might help you with your trading. Your next step is call our office at 573-224-3366. We have special offers to all the clients on my products. If you already own a product, you'll get a big discount on the rest. And my email is joecrutt@gmail.com, and our company website is www.etrackrecords.com. Well, there's a lot here. I'll make sure that you got a PDF that has all the numbers correct, and they'll be posted. And all these TSWs, all these recalibrated ones, are posted on the JK member site. Well, good luck and great trading. We'll see you next week. Thanks for watching.